You know, Mester earlier in the week was saying, we can't even say yet whether inflation has peaked. And I wonder if you think CPI proves her right.
It certainly is a score on her scoreboard. This inflation is incredibly sticky. It has moved from the goods to the services side, and the services side is reflecting both pent-up demand for services coming out of the pandemic, as well as an incredibly tight labor market. So the Fed's mission to get inflation down, now that it has shifted to the services side, is even harder than it was when it was concentrated in the goods side.
Yeah, I'm thinking back to a few months ago when Powell was saying, he was really hammering on that ratio of job openings to unemployed worker. But now, do you think it's just about outright job loss?
I think we're getting increasingly to that. When I read through the minutes, it's pretty clear that they think they've overshot the natural rate of unemployment on the low side. So I think they actually want to get the unemployment rate up. It's not collateral damage, but an objective. So really where it comes down to is they're going to keep on keeping on with the tightening monetary policy until the inflation prints cry uncle and the labor market cries uncle. They're effectively operating on a single mandate because they think they've overshot on the low side the natural rate of unemployment.
All right, so Paul, it's David. So keep on keeping on. What does that mean? Where are you in terms of where they end and how long they stay there?
I don't have a big quarrel with how the marketplace is repriced this morning. Before this morning's data, I was thinking in terms of 75 at the next meeting, and then they would downgrade to 50 at the following meeting. And I don't have confidence in that forecast anymore. So keeping on is essentially continuing on the 75 clip until something cracks. And that doesn't necessarily mean the financial system, as we've been hearing a lot of chatter about, but in the data, actually the inflation data, and I think even more importantly, the employment data.
Yeah, I'm wondering, where's the first crack going to be? Because, everybody's looking for it. So where do you see it? What should we be focusing on?
I mean, logic would suggest that it would come in the financial markets before it comes in the real economy. The real economy is a whole lot more glacial in its adjustments than Wall Street is. But I'm not in the business of forecasting Minsky moments. So when I'm focused on what's going to crack, I'm thinking in terms of the real economy, the inflation data, which is why this is going to be a more elongated tightening cycle, because it takes a while, essentially, for the Fed to beat up on Main Street, whereas Wall Street can get a telegram and read it.
Paul, Austin Goolsbee spoke at NABE a couple days ago, and he argued that he doesn't think the Fed's going to change the target to 3, but there's a strong possibility that it de facto accepts 3 as an acceptable target and maybe can declare victory from there. You think that's going too far?
No, I don't. In fact, I would be a loud amen to what Austin was saying, that actually trying to get all the way back down to 2, I think, would be unnecessary. They will not announce that now, obviously, because they have a religious devotion to the 2% target. But if they can crack this economy and not have a severe recession and get inflation back down to a 3 handle, I think they would declare victory all day long.
Yeah. Hey, finally, 2 things. Where does unemployment peak, do you think? And what do you make of some of the stories this week that argue Brainerd, Daly, we're getting more variance in commentary? Is that important, and does it get wiped out today?
It's clearly going to be a 4 handle on the unemployment rate, and I think you have to price in increasing risk of a 5 handle. With respect to the commentary coming in, I think that the vice chair in particular recognizes that we're getting close to where we have 2-sided risk, that even though they are acting as if they have a single mandate right now, that we're getting close to the point they have to pay attention to the fact that they can crack the economy harder than they want to. But more importantly, and they have to be very careful when they talk about this, they really don't want to crack orderly markets. And I don't think we're there, but that risk is becoming more prominent, I think, in their calculation. I think it was wonderful that Vice Chair Brainerd has put that into the conversation.
Yeah, certainly a gut punch today, Paul.
Yeah.
Great to see.